Good evening, students. How are you, students? So, students, we are doing chapter 4, that is audit evidence. And today we shall be learning about essay 520, that is analytical procedures, and essay 530, that is audit sampling. And Tejaswin, you are asking me to revise, to give a little bit of revision of essay 501, 505, essay 510. So, Tejaswin, what we'll do, we shall make a quick revision of all these essays which are contained in chapter 4 in our last lecture or relating to chapter 4. Okay, which would be coming at the end of this month. Okay. So, first of all, today, students, we shall be taking up essay 530. That is audit sampling. So, students, you have been reading from chapter 1 itself that it is not practicable for the auditor to check and verify each and every transaction. So the auditor resorts to test various items in financial statements by means of audit sampling. So is it mandatory for auditor to embark upon audit sampling? Yes. Any thoughts on that? Or there can be some other point of view? Yes, guys. Just I am interacting with you. What do you think about it? Yes. Drop a mail, guys. Is it mandatory for auditor to resort to audit sampling in every case? What is your take on that? Yes, Arup, you are saying no. Yes. Any other viewpoint? Yes. Anyone else? Yes, Pranav, you are also writing it is not mandatory. Tejaswin, you are writing it is mandatory. Tambeshwari, you are also stating it is mandatory. Pallavi is writing no. So students, you have to understand this thing very clearly, and this is expressly stated in essay 500 that there are 3 means available for an auditor to select items for testing. What are those 3 means? These 3 means are examination of all items. It means 100%. Okay. So it has nothing to do with audit sampling, rather how you can say how to obtain audit evidence. And second is selecting specified items, specific items for testing. And third is, of course, audit sampling. So I think students, you have absorbed this concept in your mind that although auditor frequently uses audit sampling, but it is not the only means available for him to test items which he want to test to obtain audit evidence. So one of such means is examining all items. So of course, the auditor can test all the items if he chooses to do so. There is no bar for him. So SA 500 states that an auditor can verify, that an auditor can select 100% of items for testing in certain circumstances. Now, what are those circumstances? Yes, can you think of such circumstances? Yes. Anyone? No, Tejaswin, no, not investigation. Investigation is different from audit. As you have read in chapter 1, that it is distinct from audit and it is beyond the scope of audit. Investigation means fact finding to obtain conclusive clinching evidence. So we are focusing upon audit. Do not forget that. No, Pranav, when the auditor checks all the auditor balances, and Pallavi, you seem to be off the mark. So I am asking, can you think of some situations where it would be good for auditor to examine all items, to examine 100% of items? No, probably you are not getting it, guys. So the SA 500 states certain circumstances where examination of all items is recommended. Okay. Say for example, the population which the auditor is testing, it consists of say small balances of huge values. Say you are auditor of a company, and in the sales account there are only say 20 or 30 entries of say 5 lakhs each, around 5 lakhs each. So obviously you would be finding it easy and efficient to examine all the items. Yes, Pranav, you are writing correctly. Okay. And say when the auditor thinks that there exists greater risk of material misstatement, and it is necessary for him to examine all the items, and it is cost effective, it is efficient to verify all the items. Okay, so this is one way, this is one means for testing. Clear, guys? Yes, Pallavi, you are also right. And second is selecting specific items for testing. Now, students, you have to make a distinction between these two things. These two things are different. Say, I'll give you an example. We shall try to understand it by the means of an example. Say, if I am auditor of an entity, I am auditor of an organization, and what I do is I check related party transactions. I check some some transactions pertaining to expenses beyond a certain limit. Say I check expenses beyond 10 lakhs. Okay. And say I also suppose I choose to check certain additions to property, plant and equipment above a threshold amount, above a certain amount. So this is so I have identified certain important areas on which I am focusing. So I have selected certain specific items for testing. So have I resorted to audit sampling? So have I resorted to audit sampling? No, this is not audit sampling. But this means of testing, this alternative means of testing is also available to auditor. He is performing audit procedures and he is doing his work in accordance with SA 500, in accordance with SA 500 pertaining to audit evidence. This is also valid. But he is not resorting to audit sampling. He is selecting specific items for testing. Clear, guys? So this thing is clear. So many a times students, what happens is that you do audit sampling and but you fail to understand its true import, its true meaning. So it becomes very important, it becomes imperative for you to clearly understand what a particular term means, what are its ramifications, what is its true import. Okay. No, Tejaswin, it is not this way. You are saying sampling means to take a sample with assertion level and specific item means to check different class of balances. No. So I will again compare audit sampling with selecting specific items for testing when we shall be studying what do we mean by audit sampling. Okay, so Tejaswin, it will become clear to you in a short while. So what third thing is, students, audit sampling. Now what does audit sampling mean? So you already know, in your minds you have got a picture of what does sample mean. You are very familiar with this term sample. Okay. So in the context of audit of financial statements, SA 530 states that audit sampling means application of audit procedures to less than 100% of items in a population so that all sampling units have a chance for selection. So there are some terms in it. So we shall explain these terms, and in context of audit sampling, students, there are some terms. So before we discuss different methods of audit sampling and before we learn in detail about audit sampling, we shall be first discussing those terms. Okay. So what are those terms? Those terms are, one such term is population. One such term is sampling units. So what does population mean, guys? In context of audit sampling, what does population means? Population means the entire set of data from which a sample is to be taken. So guys, I have prepared a summary of this topic, audit sampling, and I have uploaded in on the portal also. So I'll quickly go through. I will quickly take you through those short summaries. Okay. So what is population? The entire set of data from which a sample is taken, about which the auditor wishes to draw conclusions. Clear, students? Like say you wish to draw samples from say trade receivables. Okay, so all the trade receivable balances form population. Okay, yes, Pallavi, you are right. And what is sampling unit? So sampling units are individual items constituting a population. So like in this example of trade receivables, so each trade receivable balance, each account balance under trade receivable is a sampling unit. Okay, so population means the entire population from which sample is to be taken, entire set of data from which sample is to be taken, and each individual item forming part of population, you can understand it is a sampling unit. Like suppose you want to take sample from sales account. Okay, so each sales invoice is a sampling unit. Okay, clear? This much is clear to you guys? Population and sampling units. And what is audit sampling? So we again come to audit sampling. It is the definition as per SA 530. So the application of audit procedures to less than 100% of items within a population of audit relevance, such that all sampling units have a chance of selection in order to provide the auditor reasonable basis on which to draw conclusions about the population. So every sampling unit has a chance of being selected. Okay, and whatever the results of sample are, these can be extrapolated to whole of the population. So this is how sampling results are evaluated. This is how sampling results are assessed. So if you find some misstatement in a sample, then it is projected to whole of the population. So this is the difference between, you can say, one of the difference between audit sampling and selecting specific items for testing. So when you take specific items for testing, you cannot project the results to the whole of the population, because sample has not been taken at the first place. Because by sample we mean that every sampling unit has a chance of selection. Yes, Vaishali, you're right. Vaishnavi, sorry. Yes, Tejaswin, is the difference between audit sampling and selecting specific items for testing clear to you now? Yes, Tejaswin. Okay. Great, Tejaswin. So, students, remember in chapter 3, you had read about detection risk. Remember, guys? Can anyone tell me the meaning of detection risk? You had studied this in quite detail in your chapter 3, that is risk assessment and internal control, detection risk. Yes. Okay, that's right, Tejaswin, but what does it mean basically? Yes, anyone who can tell me the meaning of detection risk? Yes, Tejaswin, you're right. The risk, the chance that the auditor may not be able to detect material misstatement despite application of procedures, despite performing audit procedures. So that is detection risk, and it is one of the components of audit risk. Okay. Yes, many of you are writing, Ranjita, you are writing physical checking of stock. No, it has nothing to do with that. Yes, Afsal Akram Sheikh, risk which relates with sampling and non-sampling risk. Yes, that's correct. So, as you very well know, the detection risk consists of two type of risks, two type of components again. Okay. One is sampling risk and another is non-sampling risk. So what is this again, guys? You have read in your chapter 3, risk assessment and internal control. Tell me what is the difference between sampling risk and non-sampling risk. Then we will be moving further. Tell me what is the difference between sampling risk and non-sampling risk. Yes, Manoj Kumar Makwana, you are saying risk that lies in selected samples. Yes. And what is non-sampling risk? So sampling risk is basically the risk that sample may not be truly representative of the population. Okay. So like say there are misstatements in the population, but sample you have selected is not truly representative of that population. So misstatements may remain undetected. Yes, Pallavi, you are also right. Yes, but you say, Pranav, you are writing non-sampling risk, which is not related to sampling risk. But what is that risk? Give me examples of that. Okay, that is clear from the name itself. The risk which is not related to sample, but related to what? What could be the example of that? say like the application of some faulty procedure or failure to interpret the results of items tested correctly. So that is non-sampling risk. It has nothing to do with our poor sample. So if the auditor is not able to interpret the result, or he has applied faulty procedure, then what is the fault of poor sample, guys? Yes, Sanatan, you are also right. So clear, guys? Examples. So always, guys, always when you remember the meaning, when you learn the definitions, simultaneously also keep in your mind one or two examples. So because, say, if you in the examination condition, sometime under stress, you are not able to write. So even then you can explain something by means of some examples, and you can put it in some words. Okay. And sometimes it also becomes important. Sometimes in exams you are being asked specifically to give a to illustrate it by means of an example. So it sometimes it carries the marks. The question itself says so. So for learning also it is better, and for writing also it is better, and for getting marks it is also better. Yes, Manoj, you are saying non-sampling risk. Manoj, like, look, sampling risk is the risk that there is some problem with the sample which I have selected. Okay, that is the sampling risk. So non-sampling risk is, say I, for testing something, for testing some assertion, I had to apply some different procedure, whereas I have applied some different procedure. So obviously I would be reaching a wrong conclusion. So then what is the fault of sample here? So sample has nothing to do with it, na? I as an auditor, I have selected a wrong procedure. I have selected a faulty procedure. This faulty procedure in any case would lead me to nowhere. Or say I have obtained some result by testing something and I misinterpret it. I am not able to reach its conclusion. So that may be due to my lack of experience or my lack of knowledge. So sample has nothing to do with it. So like, for example, you take a very simple example, like say path labs. So beyond the field of auditing, say in the field of medicine, there are lakhs of tests being conducted. Medical tests are being conducted every day in labs. Okay. So so obviously they are taking a sample. So they are taking a sample of your blood. Okay. So on the basis of sample, they are giving the report. So if the doctor to whom you go for showing the report, if he is not able to interpret the findings of lab which are contained in that report, then what is the fault of sample? So it is not sampling risk, na? Yes, Manoj. Yes, Tambeshwari, I have given the example. Manoj Makwana, is the point clear to you? Yes, Manoj, is the point clear to you? Okay. So guys, in context of sampling, sampling risk can lead to two types of erroneous conclusions. Sampling risk can lead to two types of erroneous conclusions. Now, what are those conclusions? Now, those conclusions are, say, in case of tests of controls, I as an auditor wrongly come to conclusion that controls are effective. Whereas actually these are not. Okay. Or say in case of tests of details, I as an auditor wrongly come to the conclusion that there are no material misstatements. Whereas actually there are. So if my sample is not representative of the population, then such situation can happen. So what would happen in such a situation? What would happen in such a situation, guys? Say if by performing tests of controls, if I wrongly conclude that controls are effective, whereas actually they are not effective, or I wrongly conclude that there are no misstatements, and but there are misstatements. So what will happen? Yes, Pranav, great Pranav. So Pranav is writing correctly. So I may end up giving an inappropriate opinion. So what would be its impact? At the end of the day, I may end up giving an inappropriate opinion. So it therefore impacts audit effectiveness. Audit effectiveness, you understand that audit needs to be effective. You have read it in planning, audit planning, essay 300, that planning is necessary for an effective audit, haven't you? So therefore it would impact audit effectiveness. Clear, guys? Yes, students, clear? And what would happen, tell me, guys, in the reverse case, in the opposite case? Say if I wrongly come to the conclusions that controls are less effective. Say if I wrongly come to the conclusion now this is the second case, opposite. I wrongly come to conclusion that controls are less effective, whereas actually they are more effective. Or in case of test of details, I wrongly come to the conclusion that there are misstatements, whereas actually there are not. So what would happen in such a case? Yes. What would happen in this case, guys? In first case, we had seen that auditor may end up giving an inappropriate opinion, that it would impact audit effectiveness. No, audit is ineffective in first case, Pallavi. What would be the impact in second case? Say if due to a sampling risk, I have selected a sample, and on the basis of sample, I have wrongly concluded that controls are less effective, whereas in population, they are more effective. No, there is no audit risk. Okay, that's an. So my question is what impact it would make? Which aspect of audit would be impacted? I am asking from you. Okay, there is no audit risk. He won't be giving an inappropriate opinion, because we had learned in audit risk itself that it is there is a very lower possibility, there is an insignificant possibility of it. No audit report, no, guys. So it would impact audit efficiency, students. Want it impact audit efficiency? I may have to do all the procedures again. Yes, audit will be time consuming, and I would end up performing more procedures and finding nothing, and I would be wasting my valuable time. So it would be impacting audit efficiency. Yes, Vaishali, affects efficiency. So guys, these 2 points are quite important. MCQs can be made on these, and question can also be descriptive question can also be made on it. So sometimes when you read so much of the material, but you miss certain important points, certain significant issues in a topic. So this being a technical topic, that is why I have thought it better to prepare a summary for you. So guys, remember these 2 terms, audit effectiveness and audit efficiency, and how these are related in case of tests of controls and tests of details to sampling risks. Yes, students, both the points are clear to you. So this I have also explained in this summary. So same whatever I have told you in simple language, in understandable language. It is written here in textbook language. Clear, guys? And there is another term in audit sampling, students. Rather, there are two more terms. One is tolerable rate of deviation. And another is tolerable misstatement. Tolerable rate of deviation and tolerable misstatement. So first of all, we shall try to understand these terms, and then we shall see their textbook definition. So what is tolerable rate of deviation and what is tolerable misstatement, and what is the difference between these two terms? Students, you have to be very clear about these two terms, because when you would be reading audit sampling essay 530 from your module, you would be finding these terms sprinkled all over the topic. Okay. So what is tolerable rate of deviation? So tolerable rate of deviation means a rate of deviation from the prescribed internal control rules which you can say which is accepted by the auditor. So this is tolerable rate of deviation is used in context of controls, in context of tests of controls. So tolerable rate of deviation, like say you are checking the procedure for approval of say something, approval of purchase invoices or some similar thing, or approval of orders by the competent authority in a company. Okay, and you say, and you think that 1% rate of deviation is acceptable, that it may be due to oversight, it may be due to clerical errors, it may be due to ignorance. So 1% deviation is acceptable. Say, and you take a sample of 100 purchase invoices and you find that 7 of them are not approved. So what is rate of deviation on your actual checking? It is 7%. So what was tolerable limit you had fixed? It was 1%. Okay, so actual rate of deviation is now more than tolerable rate of deviation, which you were willing to accept. Clear? Yes, Manoj, you are right. So what is the textbook definition of this? A rate of deviation from internal control procedures set by the auditor, in respect of which auditor seeks to obtain an appropriate level of assurance. The deviation set by the auditor is not exceeded by the actual rate in the population. Okay. So an example is also given, like similar to one which I had quoted. Okay. And another thing, students, is tolerable misstatement. Another thing is tolerable misstatement. Now, tolerable misstatement, students, always remember that it is a monetary amount. It is a figure. It is a monetary amount which is set by the auditor. That this much misstatement I am willing to accept. So earlier, tolerable rate of deviation, just Tejaswin, you are saying, so sir, we will accept 7%. Then no, we shall not accept 7%. We shall be increasing our area of checking first. Yes. So tolerable misstatement means monetary amount which is set by the auditor, which he is willing to accept. That so much misstatement I am willing to accept. Okay. So if the projected misstatement is greater than the tolerable statement, then again he would be increasing area of checking, more substantive testing would be needed, because now misstatements, projected misstatements have increased beyond my tolerance level, beyond the tolerable amount which I had set as an auditor. Yes. Clear, guys? So there is, I have also included an example, students, so you would be so this example, students, you can have a look. So sample of 50 sales invoices tested by the auditor. The total of invoices is 50,000. Auditor has tested 50 sales invoices. Total of invoices is 50,000. So out of 50 invoices, out of 50 invoices, he verifies that 3 invoices have been recorded wrongly, leading to misstatement of 1800 in above samples. So in 3 invoices, he has found misstatement of 1800. 3 combined together, he has found misstatement of 1800. Okay. Yes, Pallavi, you are getting the answer from this example itself. So total sales during the year, say, are rupees 1 crore. Okay. And he has fixed tolerable misstatement earlier at rupees 3 lakhs. Say if the misstatement is up to rupees 3 lakh, that I am willing to accept. Keeping in view materiality, he has fixed it at 3 lakhs tolerable misstatement. So he says that I am willing to accept misstatement up to rupees 3 lakh. So, but in this case, projected misstatement after extrapolation would be what it would be? 1800 divided by 50,000 into 1 crore. 60,000. Yes, Manoj, that's right. So projected misstatement is greater than tolerable misstatement. So therefore, obviously, sample size has to be extended. More substantive checking has to be performed to see whether such misstatements find further resonance. Okay. So clear, guys? So remember these two terms, tolerable misstatement and tolerable rate of deviation. One is used in context of controls, and tolerable misstatement is always a monetary amount. It is always a monetary amount. No, it is not some standard, guys. Balachandra, it is not standard. It is not so that you have to fix at 3%. It depends upon the professional judgment of the auditor. Yes, Kasak, you are saying we make a estimation of 3,60,000. It can be more or less than it. Yes. So this is how you would be calculating projected misstatements on the base of sample. Kasak. So this is only a means to explain the concept to you. Yes, it is fixed by the auditor. Clear, guys? This term is clear. So another term is anomaly. What is anomaly, students? Anomaly. Anomaly means simply understand odd man out. So anomaly is a misstatement or deviation that is not representative of the misstatements or deviation in the population. So sometimes some anomalies creep in, but which in fact do not show that there is deviation or misstatement in the population. That is not truly representative. Okay. So therefore, anomaly may be excluded by the auditor by when extrapolating the results. Okay, otherwise it may give a distorted picture. Yes, students. So these terms are clear to you. Again, I am repeating it. So far, we have understood the meaning of audit sampling. We have understood the meaning of population. We have understood the meaning of sampling units. We have understood how sampling risk can lead to erroneous conclusions for tests of controls as well as tests of details, and how it can impact audit effectiveness and audit efficiency in different scenarios. We have understood the meaning of tolerable rate of deviation and tolerable misstatement. And we have also understood the meaning of anomaly. Anomaly, students, like Tejaswin, anomaly, you can say, you can take any example. Say you are in the sample, say this approval example which we had taken. Say the invoice was in fact approved but not approved in proper manner. Say the initials were there, and so it was taken as a deviation. whereas in fact it was not. Yes. So Ratha Malini and Tejaswin, is it clear to you? So anomaly is always used in the context of misstatement or deviation. So I have found some deviation, but this deviation is not representative of the deviation in the population. Okay. Yes, Pranav, yes, you are on the probably on the right track. So now, students, we shall be taking up sample design, size, and selection of items for testing. So while designing an audit sample, obviously consider the specific purpose to be achieved and combination of audit procedures that would achieve that purpose. So that is the foremost consideration. And what should be a ideal sample size? What consideration should be there for sample size? So consideration for sample size is to reduce the sampling risk to an acceptably low level. So sample size should be such which reduces sampling risk to an acceptably low level. So the level of sampling risk an auditor is willing to accept. Okay. So the lower the sampling risk the auditor is willing to accept, so the greater the sample size would be. So if I am in my professional capacity, if I am very conservative, okay, so I do not want to take any chance. So I would want to keep the sampling risk at very low level. So therefore my sample size would be greater. And if I am willing to accept sampling risk at a little bit higher level, so my sample size would be smaller. Clear, guys? So again, the sampling size can be determined by the exercise of professional judgment and by statistically based formulas on the basis of tools. And what factors, students, affect sample size? Which factors affect sample size? So consider this case. Say if my tolerable rate of deviation increases, what would be effect on sample size? Yes, tell me. If my tolerable rate of deviation increases, what would be impact on sample size? If I am willing to accept higher rate of tolerable deviation, then what would be impact on my sample size? Yes, Balachandra, it will decrease the size of the sample. It will decrease the size of sample. Yes, Tejasvi, it will decrease the size of sample because I am willing to accept uh, more more deviation. Okay, by my tolerance level in respect of deviation has increased. So I am willing to accept a greater deviation from the prescribed procedures. So obviously it would lead to decrease of sample size. So on the contrary, if my tolerable rate of deviation has decreased, so it would lead to increase of sample size. So similarly, in case of test of details, an increase in tolerable misstatement would lead to decrease of sample size. So if I am willing to accept greater tolerable misstatement, it would lead to decrease of sample size. Yes, guys. So students, there are two approaches for sampling. One is statistical sampling and another is non-statistical sampling. So what is statistical sampling? Statistical sampling means random selection of sample items and the use of probability theory to evaluate sample results and measurement of sampling risks. Yes, Bhavna, you are saying why tolerating deviation increase have to decrease sample size. So Bhavna, you have to understand this way. Say if I am willing to accept more deviation, it means that my risk is I I am willing to accept more risk. Okay, so therefore obviously my sample size would decrease. Why I would be taking sample a larger samples if I am willing to accept more tolerable rate of deviation? What would be the purpose of it? Okay. So statistical sampling students has got two characteristics. Statistical sampling has got two characteristics. One is random selection of sample items and another is use of probability theory to evaluate sample results and measurement of sampling risks. So any approach which doesn't have both of these characteristics is called as non-statistical sampling. So both the approaches are okay. Only thing is that statistical sampling is more scientific. And when non-statistical sampling is also used, the bias in selecting of sample is to be avoided. There should not be any bias in selection of samples. Bias means bias, you say prejudice, like you say that this teacher has a bias towards this student, that he favors this student. Okay, so auditor should not be inclined or disinclined towards something or against something. So difference between statistical sampling and non-statistical sampling is clear to you, students? So what are the, again I am repeating, statistical sampling has got the two features. One is random selection of sample items and second is use of probability theory. It means use of statistical formulas based upon probability theory to evaluate sample results and measurement of sampling risk. Yes, Pakshpati is the proper Hindi word, Tambeshwari. Okay, like formulas based upon standard deviation, mean. Okay, so these are used by available tools. Okay, and a sampling approach that doesn't have these characteristics, both 1 and 2. 1 and 2 characteristics both are not present. So then it is called non-statistical sampling. So now students, we come to methods of selecting samples. Methods of selecting samples. Now, there are 3-4 methods described in your module. So you have to understand, some are very simple and in few of them you have to understand a little bit. So again, uh, nothing so difficult or some great science etc. is not involved. So one method is random selection. So random selection means through random number generators, like by using of random number tables. There are random number tables available. There are random number generators also, online tools also, from where you can make random selection. Okay. And students, in this context, there is also a term which is called stratification. So stratification, students, stratification means is derived from the word strata. Strata means layering, dividing something, dividing data into something, layering. So students, like say, you are taking a sample from say trade receivables. Okay, so assume there are trade receivables between 1 lakh and 15 lakh. Okay, so what you do is you divide trade receivables into say 3 or 4 categories. Say above 10 lakhs and up to 15 lakh. And second category you make say between 7.5 lakhs to 9,99,900, 9.99 lakhs. And similarly, you make a third category, say between 5 lakh to 74999. So what you are doing, you are stratifying the data. And by making such sort of stratification, say the balance is above 10 lakhs, you are checking all the items. 100% of the items you are checking above 10 lakhs. And between say 750 and 10 lakhs, you are checking 50% of the items. And in the lower category, say you are checking 25% of the items. Okay, so this is known as stratification. So this also improves audit efficiency because you are laying more emphasis on high value items. You have checked all those items. Okay, clear guys, meaning of stratification. And another method, students, is systematic selection. Now, what is systematic selection? Now, it is a method in which the number of sampling units in the population is divided by the sample size to give a sampling interval. So like suppose there are 100 balances, an example is given. There are 100 balances in trade receivables and it is decided to take a sample of 5. So out of 100 balances, it is decided to take a sample of 5. Okay. So sampling interval comes to 20. So how you would select the samples? You would select one sample randomly, one item randomly, and then select 20th item. Say you have selected 5th item. Okay. Then you would select 25th item. Then you would select 45th item and so on. So this is known as systematic selection. Clear, students? Yes. Clear, guys? So students, you would have to read it from your module 2-3 times to learn these things. So just now what we are gaining is we are just gaining a basic understanding. So that one purpose is so that you get to understand at least 60-70% of the content. Okay. And you familiarize yourself with the terms. The terms do not sound new to you when you read. They sound to you familiar terms. You know them. Okay. So in some sort of ways you feel connected to those terms. And when after attending the lecture, you would open your module and you would read, then more clarity would come to you. And third is monetary unit sampling. So monetary unit sampling, students understand that the base of it is based upon monetary amounts. So the larger values, it is designed in such way so that larger values have a greater chance of selection. And it can also be used in combination with systematic selection. Okay, how it can be done? Now let us see this. So the basic feature of monetary unit sampling is that it is connected with monetary amounts, not connected with number of items. It is connected with monetary amounts, but it can be combined with this method, systematic selection. Yes, Sanya, it depends upon which type of method you are choosing. Like, say, total amount of trade receivables in financial statements is 40 lakhs. Okay. Sample size is 4. So you want to select 4 items out of uh, balances of trade receivables having a cumulative balances of 40 lakhs. Okay. So instead of dividing the number of items by sampling size, we divide the amount of trade receivables by sampling size. Now, in this case, we have divided number of items by sample size. Now, here we are dividing monetary amount by the sample size. So, monetary amount is say 40 lakhs, and we divide 40 lakh by 4. So the sampling interval comes to 10 lakhs. Now we would use this as a base to select samples. How? This is done in following manner. Say these are the trade receivables whose cumulative total comes to 40 lakhs. Okay. A company, B, C, F, G, these are the names of trade receivable. This is the debit balance in rupees. Okay. Then first we calculate cumulative balance. So 1 lakh, 1,25,000. So again, you, like in statistics, you calculate cumulative frequency. So we calculate cumulative balances. So plus 50,000, 175, 675. So all items are added. So we are getting 40 lakhs. Then we have chosen first sample randomly. Choose any first sample randomly. Okay. And select other balances by adding to the cumulative balance, by adding to the sampling interval, and see where this balance falls. Okay. So this is monetary unit sampling. So this you can read this, although this example is not in your module, guys. So when you will read it from this summary, you would have a better perspective. Okay. Haphazard sampling. So as the name suggests, it doesn't involve any technique. Just selecting a sample without a strict procedure, without a structured technique, is called as haphazard sampling. Yes, Pranav, monetary unit sampling is in your syllabus. What I am saying is that this illustration is not in your module. This PPT, this summary, I have already uploaded in your IDs, students. Again, guys, monetary unit sampling is in your syllabus. This method is described in your module. But I have added an extra practical example to explain the concept to you. So when you would read theory, you would be able to correlate it with this practical example. And there is another technique, block sampling, and students remember that block sampling is not used very often. So block sampling means selecting a block of items, consecutive items, contiguous items within the population, like say checking first 100 invoices or last 100 invoices, or say checking similar to it, checking any sort of consecutive items. So one of the disadvantage of using block sampling is that it becomes too familiar. Say if the auditor uses this technique, then the auditee client already knows that auditor is using this type of sampling. Okay. Clear, guys? And when the auditor finds deviations or misstatements in the samples, the auditor shall evaluate their impact and see what further modifications are necessary in his or her procedures. Yes, contiguous bhavna means which are adjacent to one another. Ikatthe, you mean to say in Hindi, without any gap, like students sitting on a row, contiguous. Yes, Bhavna, is it clear to you? Yes, Bhavna, is it clear? And projecting misstatement, students, I had already told you in the beginning, for tests of details, project misstatements found in the sample to the population. So we had taken that example of sales where there were misstatements in 3 invoices amounting to 1800, and then we had extrapolated that results of the sample to whole of the population of sales. Okay, so it would help to know the auditor that if the misstatements in the samples are projected to the whole population, what would be their impact? Okay. Clear, guys? So guys, this is gist of your audit sampling essay 530. We have, again, I am giving summary of this. Quick summary before we take a short break. So guys, we had first started with essay 500, with the means available with the auditor to select items for testing. We had understood that there are 3 means available to an auditor for selecting items for testing. One is 100% examination. Second is selecting specific items for testing. And what is the meaning of audit sampling? We had discussed that audit sampling is the application of audit procedures to less than 100% of population, so that auditor can draw reasonable conclusions from the sample about the whole of the population. Okay, so we have also understood the meaning of population, meaning of sampling units, and what type of different erroneous conclusions relating to sampling risk can impact an auditor. How audit effectiveness can be impacted, how audit efficiency can be impacted. And we have also understood meaning of tolerable rate of deviation and tolerable misstatement. We have also learned about sample size and how sample size is affected by different factors. We have also understood different methods for selection of sample, like random sampling, like stratification, like uh, like monetary unit sampling. Okay. Yes, guys. Is it clear? So we shall be taking a short break right now, and we'll join again after 5-7 minutes. Time for break. Yes, Ayaz. Yes, welcome back, students. Yes, Bhavna, you are asking me to explain again anomaly. So Bhavna, first my request to you is do not first try to understand the meaning, the literal meaning of that term. Now, what is the dictionary meaning? What is the literal meaning of anomaly? Anomaly means something odd man out, something outlier, which is not representative of that thing. So here we are talking anomalies in misstatements or deviations. So those deviations or those misstatements which are not representative of those misstatements or deviations. So which in fact are not misstatements or deviations, but which seem to be so. Okay. So one way of looking at it is this, is it from this perspective, or such deviations or misstatements are of such nature that these occur very rarely. So these may be excluded. So anomaly. So one thing is outlier. So in statistics, we say that this value falls outside this range. It means it is an outlier. It means that it is an odd man out. So anomaly is a term which is used in the context of misstatements or deviations, which means that those misstatements or deviations are not representative, are not truly representative of misstatements and deviations. That is why, while extrapolating the results of samples, while projecting the results of samples to the population, the effect of anomalies are excluded. These anomalies are excluded so that these do not end up giving a distorted picture. Yes, Bhavna, is it clear to you? Yes, Bhavna, drop a mail. Is the point clear to you? Okay, great. So now we shall have a look at essay 520. The name of essay is Analytical Procedures. So guys, while reading about analytical procedures, while reading about audit procedures in chapter 4, in our first lecture, I had explained to you the meaning of the term analytical procedures. Yes, do you remember that? And I had also told you that we shall be having a look, we shall be learning about analytical procedures in detail. There is a separate essay about it, and the name of that essay is essay 520, Analytical Procedures. Yes, guys, do you remember the meaning of analytical procedures? What do we mean by analytical procedures? Yes, anyone who can tell, who can explain to, who can explain the meaning of analytical procedures? Yes, evaluating financial statements. Akram Sheikh, Tejaswin, integration with financial and non-financial data. Yes, as a plausible relationship. Sanya, establishing plausible relationship. Yes. So all of you are writing some things. So guys, as far as textbook definition is concerned, analytical procedures mean, as per SA 520, these mean evaluation of financial information. Evaluation means assessing. Assessing financial information through analysis of plausible relationship. Plausible means believable. I told you earlier also that there should be some logical relationship between the data from which you are trying to make sense. Okay. Among both financial and non-financial data. So this is the textbook definition which you have to learn and understand. So guys, first of all, understand, apart from this textbook definition, what analytical procedures are all about. Say, say students, auditor has performed all the tests of details, like say he has checked purchase, all some entries in the purchase account with the purchase bills. Say he has also sent confirmations to trade receivables, so to trade receivables and trade payables, to selected trade receivables and trade payables. He has still not found any misstatement. Okay. So these are tests which we call as routine tests. So he has done detailed checking. So another tool in his arsenal is use of analytical procedures. Like he analyzes financial information by establishing some relationship between the different items of financial statements, or between the financial information and non-financial information. Okay, say I have checked the sales with sales invoices. I have also checked the sales with GST returns, with the GST returns available on the GST portal. I have not found any misstatement. Okay. Say now I try to correlate, say the plant capacity with the and the output of the company. Assume that the company is engaged in manufacturing of one product, and it is possible to have a practicable, realistic number of the number of units produced by the entity, produced by the company during the year. Okay. And I also have with me a definite price, say a parameter, an average parameter at which the company's products have been sold. So obviously I can arrive at an estimate of the sales of the company. So I can make an expectation that given this situation, the sales of the company should be so much. Okay. Then I try to correlate it with the sales reflected in the financial statements. It doesn't mean that that if analytical procedures put up a different figure, then it is and in financial statements there is some figure, then it would definitely be a misstatement. But obviously it would be giving out to me some signals. It would be giving out to me some indicators. So if there is a considerable difference, from my expectation, then I would be finding out reasons for that, for those differences. Okay. So this is an example of how I can use analytical procedures as an auditor for audit of financial statements. Okay, like another example could be, say I as an auditor, I compare gross profit ratios of last 3 years. Okay. Say in last year it was 15%. In year previous to that it was say 15.5%, and now say it has come to 11%. So does it indicate uh, something to me, or have I found the misstatement? So the these are some pointers. These are some pointers that I need to find out what could be the reasons of fall in gross profit ratio. There could be certain genuine reasons for fall in gross profit ratio. Like say, cost of raw material may have increased, but there is no corresponding increase in the sale price due to market forces. Okay. Or the company may be selling at a discount to get the orders to survive in the market. So this is again an example of use of ratio analysis as a form of analytical procedures. Or say simply, I may be comparing expenses of one period with another. Like I may be comparing purchases of this year with last year, or I may be comparing power and fuel expenses of this year with last year. So this is again, I'm making use of trend analysis. As part of overall tests, as part of analytical procedures. So such type of procedures are also known as overall tests. Clear, guys? Say another example could be, say the company of which I am an auditor, it has taken loan from bank. And I come to notice from the financial statements that that the company has shown in the profit and loss account, say interest amount of X amount. Okay, say the company has taken loan of 1 crore and the interest amount debited is say 5 lakhs. And I also come to know from the sanction letter that rate of interest is to be charged on the loan is say 10%. So again, I am applying some sort of procedure to see whether the amount reflected in financial statements, whether it consists of any material misstatements. Say if the interest amount is not 10 lakh, it is 5 lakh, then I would be finding out reason for that. It may be due to the reason that loan has been disbursed in second half of the year, or the company has not availed full amount of loan. So here I am using reasonable test. What appears to me reasonably good, what appears to me as a reasonable, this figure has not reflected. Okay. So guys, you understand what do we mean by analytical procedures? What is their nature? What is their essence? So when we say analytical procedures mean evaluation of financial information. So what is reflected in financial statements, we are assessing it by analysis of plausible relationship among financial as and non-financial data. Okay. So examples of analytical procedures having consideration of comparisons of the entity's financial information are like comparing comparable information for prior periods, like you are comparing sales for 2 years, or you are comparing few expenses with past years, what were wages in this year and what were wages in last year. So this is comparing information for prior periods. Second is anticipating results of the entity, such as budgets or forecasts or auditors' estimates. So you are also building your expectation as an auditor by going through the budgets or by the going through the forecasts, what the entity was expected to achieve and what it has achieved. So it is again a yardstick to you. So again, a different parameter, a yardstick is available to you. Okay. Similar industry information, like such as comparison of entities ratio of sales to accounts receivable with industry averages. Now, what is the industry average? Say if the company is engaged in some sort of some industry, then its result should more or less be within the range which is applicable to that industry. Okay. So such comparison can also throw a light to the auditor that what can be wrong with the financial statements. Yes, students, is it clear to you? Yes, drop a mail, guys. And examples of analytical procedures having considerations of relationship, like ratio analysis, like gross profit ratio, like net profit ratio, like raw material consumption ratio. Okay. Like inventory turnover ratio. Yes. Anyone who can tell me what is inventory turnover ratio? We will be studying about it in chapter 5. But for the time being, guys, do you know what is inventory turnover ratio? Yes, anyone? Yes, anyone of you with who has an idea of what is meant by inventory turnover ratio? Yes, yes. All of you are writing correctly. No, stock on debtors. No, Nisala, Pranav, Tejaswin, Bhavna, all of you have written correctly. Yes, cost of goods sold upon average inventory. So what does this ratio denote? Yes, Sanya, you are right. Cost of goods sold upon average inventory. So it means how fast the sales are taking place. and how efficiently the company is using its inventories, as Sanya is writing. So students, analytical procedures can be segregated into the following major types, like comparison of client and industry data, comparison of client data with similar prior period data, comparison of client data with client determined expected results, like forecasts, budgets, okay, and comparison of client data with auditor determined expected results. Like I had given you an example of estimating or expecting the sales of entity depending upon the plant capacity. So it was an example of auditor determined expected result. So I, as an auditor, I am expecting sales to be reflected in the financial statements at this figure, say around, keeping in view plant capacity at around 10 crores. So obviously it would be 970, 980 or 1050 in around that. Okay. So if there is greater difference, then obviously I would be finding out whether my expectation was wrong or there is some another reason. Okay. So comparison of client data with expected results using non-financial data. Okay. Using by usage of some other information. So when students, analytical procedures are used to detect material misstatements, they become substantive analytical procedures. So they are used when they are used near the end of the audit, and which help the auditor in forming an overall conclusion on the financial statements, on the basis of which he has to make his opinion. So SA 520 deals with these analytical procedures. So, but remember that analytical procedures are used by the auditor in planning stage, in testing stage, and as well as near the end of audit. So remember, guys, when we had read risk assessment procedures, there also we had read that analytical procedures are also used as risk assessment procedures. But here we are talking about substantive analytical procedures. Okay. Yes, Vaishnavi, like plant capacity, which I am telling you, it is not truly a financial information. It is not truly captured in financial statements. Okay. So purpose and timing of analytical procedure, same thing is written, that it uses comparison and relationships to evaluate, to assess whether the data or the balances are reasonable. So the purpose is same, to draw conclusions, to assess the financial information. The only difference is that it is different from routine checking. It is just not verifying the figures with evidences, with documentary evidences, with vouchers. It is more than that. Clear, guys? So there are certain examples are given, also general examples. So timing of analytical procedures, I have already explained to you. Planning phase, testing phase, and completion phase. These are used in all stages of audit. Remember that analytical procedures are used in all stages of audit. It is important. Experienced auditors use analytical procedures in all stages of audit. Now, factors to be considered for substantive audit procedures. Now, one thing is availability of data. So obviously, if the relevant data is not available to you on which you have to build your expectation, or on which you have to make the comparison, that is the foremost requirement. So availability of data is to be there. Second point is disaggregation of data. Disaggregation means, aggregation means combining, and disaggregation means breakup. So the more the data is disaggregated, the more you can use it by the auditor for the purpose of analysis, for making relationships. Okay. Account types. Now, substantive analytical procedures are generally more useful for you can say profit and loss accounts, because the profit and loss account balances are in the nature of routine transactions, repetitive transactions, like relating to sales, purchase, wages, salary, administrative expenses. And they represent a sort of accumulation over the year. And whereas balance sheet items reflect the net effect of debit and credit. So it is not that analytical procedures cannot be used in context of balance sheet items, but the point is that they are more useful for profit and loss items than for, say, balance sheet items. Question is for degree. Okay, so it is an academic point, you can say. Source. So obviously, if some transaction is used, recorded by in which greater judgment is involved or management discretion is involved, so then it is more difficult to predict, and it is less prone to use of analytical procedures. Okay, because it is not that you are putting some input and some output would come out. So because you have to think, you have to analyze, you have to make a judgment. So therefore, those transactions which involve judgment, which involve use of management discretion, they are more difficult to predict. And the transactions which are more easy to predict because they are similar, they are routine, like sales, like expenses, so they are more prone to analysis. And say online tools can also be easily perform analysis on such type of transactions. Okay, so like say management has made some provision, okay, taking into account what its liability would be. Okay, so what online tool can make out of it? What sense online tool can make out of it? So obviously auditor would have to see whether the judgment of management is proper, on what basis management has made its judgment. Okay, so routine transactions, predictable transactions, these are more amenable to analytical procedures. Okay. So another is predictability. Substantive analytical procedures are more appropriate when relationships are predictable, like between different items of financial statements, there is a predictable relationship. Like there is a relationship between sales and cost of sales, or between sales and trade receivables, or between purchase and trade receivables, trade payables, sorry. So, but there is no relationship between purchase and trade receivables. Okay, so relationship should be logical, it should be sensible, it should be believable, it should be plausible. This is the meaning of plausible, which we had read in the definition of SA 520. Okay. So nature of assertion which is going to be tested, like analytical procedures are more useful, say regarding completeness assertion. Okay, but not so in case of rights and obligation. Say it would be difficult for me to apply analytical procedure to test whether the entity has right over an asset or whether the entity has an obligation over a liability. Okay, so these are some kind of factors which are given in your module, which are to be considered for substantive analytical procedures. And techniques available as substantive analytical procedures. So guys, I have discussed these techniques in the beginning. Trend analysis, like comparing information of one period with another period. Ratio analysis, like comparing GP ratio, like comparing net profit ratio, like comparing cost of sales to sales ratio. Reasonable tests, to see whether the amount affected is reasonable. Like I had given you the example of interest paid to bank. So instead of verifying each and every item from bank statement, instead of watching each and every item from the bank statement, you are making a reasonable test. You are making an overall test to see whether the interest amount reflected in financial statements is reasonable or not. Clear? And another is structural modeling. Structural modeling means that you do not need to go into detail about it. You have just to understand that it is a statistical tool, statistical method where information of the prior period is taken to predict some balance of current year by using some tools. So this much you have to understand, and you need not have to go into the technicalities of it. It is only a passing reference in your module and in also in the related standard on auditing, that is SA 520. Okay. So when analytical procedures are used as substantive tests, then determine suitability of analytical procedures, evaluate reliability of data, and once that data you intend to rely upon is reliable, then you develop an expectation. The auditor develops an expectation. Like I had given you an example of sales, that I developed an expectation that sales would be in the range of 10 crores, depending upon the plant capacity. So determine acceptable difference. then I would be determining what is the likely range in which the sales would be acceptable to me. Okay, if there is difference greater than that, then I would need to investigate. I would need to find out whether my expectation is wrong or whether there is some another genuine reason on the management's part. Okay. So this is all about students analytical procedures. So we shall quickly go through some questions based upon our knowledge in past chapters. Yes, question number 1. Yes, question number 1, students. While answering, guys, do write question number. Yes, in certain circumstances, an auditor may also judge it necessary to meet entities' external legal counsel in relation to litigation or claims. Which of the following is not an example of such circumstances? Yes, this question relates to essay. Yes, students, jaldi bata do. Which essay is this? Tell me quickly which essay is this, and then you answer. Yes, essay 501, correct. Pranav, great. Now tell the answer also. Yes, tell the answer also now. No, Sanya, it is not 510. It is 501. Again, when you write, be particular, be careful. Yes, we are having quite varying opinions. Few people are writing B, some are writing C, some are writing D. So the point I think is not clear to you guys. So you have forgotten essay 501. So probably Tejaswin, your demand was right. That you need to revise these essays. So probably you have not opened your modules. I have told you that you have to open your modules and learn the things. There is no shortcut to it. There is no shortcut to it. So guys, we had understood in essay 501 second part. Remember essay 501? It relates to 3 things. First of all, remember this. One thing is existence and condition of inventories. Second thing is litigation and claims involving the entity. And third thing is segment information. So this thing relates to litigation and claims involving the entity. Okay, so we had learned that the auditor performs audit procedures to see whether there are any risks of material misstatements in litigations or claims involving the entity. Okay, what he does, he performs review of legal expenses account. He goes through the minutes of the meetings between the entities, external legal counsel and management. Okay, and he makes inquiries of management and in-house legal counsel. And we had also learned that if he assesses that there is a risk of material misstatement, then he may communicate. And we had also discussed that he may want to meet the external legal counsel in certain circumstances. What were those circumstances? Why it would be necessary for the auditor to meet external legal counsel when say the matter is of significant risk, or when the matter is complex, or when there is a disagreement between the management and external legal counsel. So the question is asking which of the following is not an example. All the three are examples. Option A, C, and D are examples. So if the auditor determines that matter has not been disclosed in financial statements, so it is an omission on management's part. So whether he would straight away go to the external legal counsel to meet him, that management has not disclosed this matter. So external legal counsel would say, how I am bothered? Boss, what do you want to ask from me? Why have you come to me? So answer is B. Yes, Nitin and Afsal Akram, you have written correctly. Amit Biswas, Sanya, you have also written correctly. Yes, guys, is the point clear to you? So by this way, we are revising SA 501 also. Yes, Tejaswin, is it clear to you? The question is asking which of the following is not an example of such circumstances. Okay, guys. So first see what is the requirement of the question. Look for words not likely, not appropriate or appropriate, not an example or example. Okay, unlikely or likely. Try to read between the lines. Yes. Second, see the question number 2. So it relates to SA 505. External confirmation. So like students, I have been telling you, the names of essays should come to you naturally. You do not have to strain your mind a lot for recalling the name of essay. So your preparation should be of such level that the names come to you naturally. There is no chance of mistake. Now, what is the question? Question is asking which of the following best describes meaning of external confirmation in accordance with SA 505. So which of these definition best suits the meaning of external confirmation? Yes, some people have answered. Pranav, Akshara, Sanya, Deepak, Nistala, Purva, Apurva Das. What about others? Yes, guys. Yes, most of you have given the right answer. So, but some of you guys, Dipali and Afsal and one more. So guys, you are writing D. How it is D? I told you that external confirmation is not restricted to trade receivable and trade payable alone. Remember? Remember in the last lecture I told you. Say the auditor may send external confirmation for verifying the terms of a contract. So this is how the paper setter may try to confuse you, because he wants to know the depth of your study. That is why close options can be there, guys. And how, Niru Ben, how you are writing C? External confirmation as an audit evidence is obtained directly by the auditor. It is not through the internal auditor. This option is totally wrong. Yes, guys, is it clear? Yes, question number 3. 3 options are on this page. So I'll scroll the page first, read these 3 options. So you have read 3 options. 4th option is this. Yes, what's the answer, guys? Yes, what's the answer, guys? Yes, Ayaz. अनम्यूट भी कर देना सबको, पूछना चाहते हैं अनम्यूट कर देना. Okay, okay. Yes, students. So what is the answer to question number 3? Yes, C is the right answer. All other options are wrong. So we had learnt in essay 505 that negative confirmation requests are used in certain circumstances. 4 factors are given in your module in essay 505. So third answer is C. And what about 4th? Read this question. Given below are certain situations. Mark situation in which requirements of essay 510 are not applicable. Yes. Yes, guys. It requires a little bit of analysis, less of cramming, and more of analysis, more of applying your mind. Guys, every one of you is writing it wrongly, is writing incorrectly. Tell me, leave apart everything. What is the name of essay 510? Tell me. Yes. Tell me, yes. Yes. Pranav, yes, you are saying initial audit engagements, opening balances. This is the complete name of essay. So essay 510 applies in respect of initial audit engagements. So what is an initial audit engagement? Now, as per definition of initial audit engagement, it means an engagement in which the financial statements of prior period were audited by the predecessor auditor, or these were not audited. Okay. So then the requirement of SA 510 becomes applicable. Now in B, ICAI is auditor of partnership firm for year 23-24. The financial statements for financial year 23 were not audited. So it falls into situation 1 as defined in SA 510. The financial statements of prior period were not audited. Okay. Second is CAZ is auditor of a firm for year 23-24. Financial statements for year 22-23 were audited by ICAI, by some another auditor. So it falls in situation 2. So again, SA 510 is applicable. Okay. And what is third? CAJ is auditor of PL Private Limited for year 23-24. The company's turnover was nil in 22-23 and CAL had given audit report. It means the accounts of 22-23 were also audited. And we know that in India, it is mandatory for companies to get their accounts audited, whether their turnover is nil or not. So nil turnover is given just to confuse you. So here also, if the turnover is nil, it doesn't mean there won't be any opening balances. There can be balances relating to equities, relating to certain liabilities, relating to certain assets. But the point 1 doesn't fall in the definition of initial audit engagement. The firm is a newly constituted. It is the first year. So where opening balances would come? So answer is A. So now Pranav, you are writing that answer is A. Every one of you has answered it wrongly. Yes, guys, have you understood the import of this question? Yes, guys, if you want to ask something, you are unmuted. You can ask on Zoom. Yes, Tejaswin, you are saying it is a bit tricky. So in examination, in professional examination, you would find some questions tricky. So these type of questions are meant to waste your time so that you end up wasting your time. Yes, anyone, any query? Yes, any person who wants to ask question on Zoom, otherwise we are closing this session. So no query, guys. So by means of these MCQs, probably I have tried to make you revise some portions of SA 501, 510, 505. Okay, basic questions. Yes. Dipali, you are saying what is predecessor auditor? Predecessor auditor means previous auditor. Simply, you can say I am the auditor of a company of a particular year, but last year the auditor was somebody else. Ashish Behel was not auditor, is auditor for year 23-24, but he was not auditor for year 22-23. Simple, just understand, just have a clarity. So Tejaswin, it is better if you prepare summary notes for yourself. So it is a student who is in a best position to remember and to make summaries. So the purpose of giving you audit sample summary was because there were a lot of technical terms involved. Okay. Yes, Sandhya, what are you asking? You are saying accounts of company should audit every year, if not audit any issues. Yes, it is mandatorily required under Companies Act 2013, Sandhya. It is mandatorily required under Companies Act 2013. There is no option. If some entity is structured as a company, it has to get its accounts audited for every year in accordance with the provisions of Companies Act 2013. Okay. Okay, guys, that's over for today. Good night. Have a great time. Okay, guys. Thank you. Thank you so much. Yes, session over, Ayaz.